Hi traders, I'm Ali from FxScouts. In today's video, I'm going to show you one of my favorite tools for identifying high probability reversals, Bollinger Bands. So whether you're day trading, swing trading, or just trying to avoid chasing price at the wrong time, then this video is for you. We're going to break down exactly how Bollinger Bands work, what they reveal about extremes of price, and most importantly, how to use them alongside other indicators to confirm entries and exits. We'll walk through two real-world examples, and I'll show you why the setups work and how I found my targets using the 20 EMA and the VWAP. Before we get started, I just want to remind you that Forex trading is risky and that most traders lose money. This video is for educational purposes only. So let's start with the basics. Bollinger Bands are a technical indicator made up of three lines. You get the middle line, which is the 20-period simple moving average, the upper band, which is 2 standard deviations above that average, and the lower band, which is 2 standard deviations below the average. The statistical boundary, or the upper and the lower band, tell us when price is being stretched too far outside the mean. And most of the time, well, approximately 95% of the time, price sits between those two bands. So when the price closes completely outside one of the bands, it tells us that something unusual is happening, either a breakout or an overextension and a reversal back to the mean. What I find is that Bollinger Bands don't work so well in isolation, so I've developed a 4-point checklist to confirm that a reversal is about to occur. And I always combine the bands with the MACD, the 9 EMA, and the VWAP. So here's the checklist I run through before taking a reversal setup using the Bollinger Bands. Number 1, price is completely outside the Bollinger Band. This is your early warning. Price shouldn't live outside the band for very long. Number 2, price is extended far away from the 9 EMA. So the distance shows how overstretched that move is. The bigger the gap, the higher the chance of a snapback. Number 3, the MACD is flattening or crossing over and curling against the trend. This confirms fading momentum, so I like to see the MACD line flatten or cross below the signal line. And lastly, you get a rejection candle that forms on high volume. So this could either be a pin bar, a doji, or a candle with a long wick and a small body like a hammer or a reverse hammer, and it shows that the market is rejecting higher or lower prices. When all 4 of these show up in the same area, that's when I get very interested. So let's take this to the charts. Here we're looking at the Euro USD on the 5-minute time frame, and this is during the London session. So you can see here that the price has already broken out earlier in the session, pulled back, and then it surged again. And at first glance, it looks like momentum is actually picking back up again. You see it surge outside the upper Bollinger Band, and there's a long upper wick, which is classic exhaustion. You see the red candle, and then price go back down to the purple EMA. However, what we did not see here was the MACD starting to flatten or turn. It still looked like it was going upwards. We wait a bit longer, and again we see price surge, hit the top band with a long upper wick that stretches above the band, and then you see price turn. You check the 9 EMA, the purple line, and can you see how far it is from the price? That's a warning sign that the price has gotten ahead of itself. Next, you look down at the MACD, and at the moment that this candle forms, the MACD is flattening and just about to cross below the signal line. That tells us that momentum is actually dying out. So at that point, I'd either enter short with a tight stop above the high, or at least prepare for the snapback. So watch what happens next. Price pulls back to the 9 EMA, then drops to the midline, the 20 EMA, and you see the crossover of the 9 EMA below the 20 EMA. And then it settles near the VWAP, and this is a common occurrence as well. This is your reversal path. It hits all the major targets. And this is why I really like this strategy. It doesn't just show you where to enter, and it doesn't just show you confirmation. It also shows you where you can set your exits. And these are quite high probability exits too. Now I want to show you another example on the 5-minute chart. So here we get a powerful upward surge, very aggressive buying. But here's what's interesting. This candle closes fully outside the Bollinger Band, and just like before, it has a long upper shadow, a sign of exhaustion. Now look at where the price is compared to the 9 EMA. Again, we're quite stretched. The gap alone tells me that a pullback is likely. Next, you're going to check out the MACD. And as you see, it's just starting to roll over. The blue line is flattening and curling back downward towards the orange signal line. That's our third signal. And finally, you get the rejection. The next candle fails to hold the high and breaks down. Now watch how price reacts after the reversal triggers. So first you get a quick return to the 9 EMA, then a drop to the middle Bollinger Band, and then a clean VWAP touch, which acts as its equilibrium point. This is a textbook intraday reversal, all check boxes ticked, and all targets hit too. Now, something very important to note is that not every time the price touches the outer bands or even moves above or below the outer bands is there a reversal about to occur. And this is where the MACD becomes very crucial. So if the MACD is open and rising, you're likely actually looking at a continuation, as you can see here with the USD JPY on Pepperstone's trading view chart. But if MACD is flattening, diverging, or crossing against the move, that's a reversal signal. Bollinger Bands alone likely can't tell you this, but if you combine this with MACD and the EMA, you're likely to get much more accurate signals. So I just want to quickly recap what we've already covered. These are the 4 signals I use to spot a reversal. Number 1, price outside the Bollinger Bands. Number 2, price is extended very far away from the 9 EMA. Number 3, a MACD curl, up or down. And number 4, a rejection candle on high volume. And these are the 3 targets I look for. So first, I'm going to look for a cross towards the 9 EMA. Next, I will look for a cross towards the middle band or the 20 SMA. And finally, we're looking for a touch of the VWAP. Both of the examples I showed you before followed this exact sequence. And that's why I really find that the strategy works across all time frames and all markets. We'd really love to hear from you in the comments below. Do you trade trend reversals or trend continuations? Can you also give us some ideas of the strategies you trade and how you may identify reversals yourself? And if you have any suggestions for future videos or indicators that you'd like to see explained, please pop them in the comments below as well. If you like this video and you gain value from it, please remember to like the video. And if you're not already, please subscribe to our channel too. Thanks so much, and I'll see you in the next video.